Welcome to our deep dive on the Backdoor Roth IRA conversion. In this video, we will explain how high-income earners can legally route after-tax dollars into a Roth IRA, allowing for tax-free growth. We will also discuss the Pro-Rata Rule, show how to avoid unnecessary taxes, and walk through Form 8606 filing. Finally, we will provide practical examples, a step-by-step checklist, quizzes, and key takeaways. Here is our agenda. First, we will define the backdoor Roth. Next, we will cover who benefits and why. Then, we will go step by step through the process. After that, we will explore the Pro-Rata Rule and show how it can cause unexpected taxes. We will also cover Form 8606 filing. We will finish with tips, pitfalls, and quizzes to cement the learning. A backdoor Roth is a legal, two-step strategy. First, you make a non-deductible, after-tax contribution to a traditional IRA. Second, you convert that amount to a Roth IRA. Because the contribution was already taxed as earned income, that contribution amount is not taxed again at conversion, assuming it is properly documented. This strategy allows high-income earners, who are otherwise barred from direct Roth IRA contributions, to build tax-free retirement savings. This strategy is best for high-income earners who cannot directly contribute to a Roth IRA due to income limits. It appeals to anyone who wants tax-free growth and no required minimum distributions in retirement. It is especially practical for people who can move any pre-tax IRA money into an employer 401k to avoid the Pro-Rata Rule. It does, however, require careful record-keeping and accurate filing of IRS Form 8606 to track after-tax basis. Here are the steps. First, before anything else, ensure that the total pre-tax balance across all traditional, SEP, and SIMPLE IRAs is zero. If it is not zero, consider rolling the pre-tax portion into an employer 401k plan if allowed. Next, open or use your existing traditional IRA and Roth IRA. Then, make a non-deductible after-tax contribution to the traditional IRA. Keep the money in cash or a settlement fund to avoid short-term gains before you convert. After that, convert the contributed amount to your Roth IRA promptly. Then invest within the Roth according to your plan. Finally, file IRS Form 8606 to record the non-deductible contribution and the conversion. Repeat annually if eligible. This sequence diagram shows the flow. The contributor sends after-tax dollars to the traditional IRA. They then file Form 8606 to record the basis. Next, they convert funds to the Roth IRA. The IRS monitors this and applies the Pro-Rata Rule if any pre-tax IRA balances exist in any IRA accounts. The end state is funds in the Roth IRA, where growth can be tax-free if rules are followed. The Pro-Rata Rule is critical. The IRS aggregates all of your traditional, SEP, and SIMPLE IRAs to determine the taxable and non-taxable portions of any conversion. Your conversion is treated as coming proportionally from both pre-tax and after-tax amounts. For example, if you have $93,500 in pre-tax money and $6,500 in after-tax basis, your total IRA balance is $100,000. If you convert $6,500, only 6.5% is tax-free, and 93.5% is taxable. To achieve a zero-tax conversion of your contribution, make sure pre-tax IRA balances are zero before you convert. This table compares three approaches. Direct Roth contributions are limited by income. Backdoor Roth conversions allow high earners to get money into a Roth by contributing after-tax to a traditional IRA and then converting. Non-deductible traditional IRA contributions without conversion result in tax-deferred growth and taxable earnings later, and they are subject to required minimum distributions. The backdoor approach avoids RMDs and enables tax-free growth, but it requires avoiding the Pro-Rata Rule and careful filing. On the left are correct practices. Eliminate pre-tax IRA balances before converting, make the non-deductible contribution and convert promptly, keep funds in cash before conversion to minimize gains, file Form 8606 accurately, and use an employer 401k to shelter pre-tax IRA funds when possible. On the right are mistakes: converting while pre-tax IRA balances exist, delaying conversion and creating taxable gains, failing to file Form 8606, or filing incorrectly, commingling large pre-tax amounts with small after-tax basis, and ignoring state tax differences or plan rules. Question: which situation most commonly makes part of a backdoor Roth conversion taxable immediately? Options: A. Having any pre-tax money in traditional, SEP, or simple IRAs. B. Converting immediately after contributing. C. Filing IRS Form 8606. D. Investing inside the Roth after conversion. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is A. Any existing pre-tax funds in traditional, SEP, or simple IRAs trigger the Pro-Rata Rule, making part of your conversion taxable. Converting immediately after contributing is generally fine. Filing Form 8606 is necessary to document the basis and does not cause tax. Investing inside the Roth after conversion has no bearing on the taxation of the conversion itself. Form 8606 records your after-tax basis in traditional IRAs and your Roth conversions. Use Part 1 to report non-deductible contributions and Part 2 to report conversions. Maintain copies each year to track cumulative basis. Ensure the numbers reconcile with Forms 1099-R and 5498, and with your individual return. The most common error is failing to file this form, which can lead to being taxed twice on the contribution. Consider a professional review to ensure accuracy. Typically, you contribute and convert during the year, and then file Form 8606 with your tax return for that year. Question: which IRS form documents your non-deductible IRA basis so that the contribution itself is not taxed again on conversion? Options: A. Form 1040. B. Form 5498. C. Form 1099-RD. Form 8606. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is D. Form 8606. This form documents after-tax basis and prevents double taxation of the contribution when you convert. Form 1099-R reports distributions and conversions. Form 5498 reports contributions received by the IRA custodian, and Form 1040 is your main tax return. Here are practical tips and common pitfalls. Consider rolling pre-tax IRA amounts into an employer 401k prior to the backdoor steps. Convert promptly to reduce the risk of taxable gains in the traditional IRA. Maintain precise records and do not skip Form 8606. Be aware that state taxation may differ. Repeat the process annually within current IRS limits and catch-up rules. If married, evaluate each spouse's IRA balances separately, because the Pro-Rata Rule is applied per individual. Keep statements documenting timing and amounts. When uncertain, consult a qualified professional. Disclaimer: this content is for educational purposes only and does not constitute tax, legal, or investment advice. Tax laws and limits change, and individual circumstances vary. Consult a qualified tax professional or financial advisor to confirm compliance and suitability before implementing any strategy. Key takeaways: a backdoor Roth involves a non-deductible contribution to a traditional IRA, followed by a conversion to a Roth IRA. Eliminate pre-tax IRA balances before converting to avoid pro-rata taxation. Filing Form 8606 is essential. Timely execution and good records simplify the process. The benefits include tax-free growth and no required minimum distributions, which can significantly improve long-term outcomes. To recap, we defined the backdoor Roth, identified who benefits, walked through each step, explained the Pro-Rata Rule with a numeric example, reviewed essential elements of Form 8606, and summarized practical tips and pitfalls. If you follow the steps and file correctly, you can harness tax-free growth in a Roth IRA, despite income limits. Thank you for watching. If this was helpful, please like, share, and subscribe for more content. Share your questions and experiences with the Backdoor Roth in the comments so we can help each other learn.